So welcome to my latest video. Here I'm just highlighting for you my indicator, the 1 hour power. I call it that because I use this indicator on the 1 hour chart. Nothing too complicated about that. It's an indicator that basically plots the MACD crossover. So here you can see that when the MACD crosses under the 0 line, it paints an arrow. The arrow is non-repainting because it's based on the MACD. So once the arrow is painted on the chart and alerts you, it doesn't flicker and disappear. It doesn't repaint itself onto another candle. I prefer non-repainting candles, non-repainting indicators personally. But I use this in conjunction with the multi-time frame moving average. So let me just very quickly highlight for you 1 hour power. I like to use the yellow color, and the inputs are email, audible alerts, and push notifications. I added these to I've added these two inputs so that although it alerts you when the MACD crosses the 0 line, if you wanted to, you can use a little bit of leeway. So in pips, I set by default this to 3 pips. So if the MACD crosses a 0 line by 3 pips, it will paint the arrow. If you don't like this, you can just set it to 0 and it will literally alert you on the crossover. But I quite like to give myself a little bit of leeway so that not only does it cross, but it crosses by just a few pips. So that's how I set it. The MACD is set to 30, 110. Here's the MACD settings that the indicator works on. So the fast EMA is 30, the slow EMA is 100, and the MACD SMA is 10 and apply to close. So that's what it works on. If you would like me to add the parameters so that you can change that and set your own, then comment below and let me know, and I can add those parameters for you if that's what you would like. But otherwise, it's just a MACD crossover with alerts, non-repainting. So very, very briefly, I'll just show you how I use this little indicator in conjunction with the multi-time frame moving average, which I set to 1 day. So it's a 1 day moving average plotted on the 1 hour chart. So what happens? Well, when we get an arrow that's pointing down in this case, and price is below the moving average, then we would sell. If there's an arrow pointing up, but price is below the moving average, we ignore it. So in this case here, you would set your stop loss just above this high, so 50 pips. I work on a 2-to-1 ratio, so if my stop loss is 50 pips, I expect to take profit of 100 pips. 50 pip stop loss is my maximum. That's my risk tolerance. I don't like losing more than 50 pips in a trade. Usually, actually, if a trade has a stop loss of less than 20 to 25 pips, I don't even consider that worthwhile either. So my stop loss I like to be between 25 and 50 pips. In this case, it would be 50 pips, my absolute maximum, and I would lose it straight away. So not a good start to the example that I'm trying to show you here. But let's move on. Here's another example. So there's a down arrow and price is below the moving average. Your stop loss Well, it's above my 50 pips. So maybe I would set it to 25 pips, just above this little high here, expecting it to go lower. And of course it doesn't. And that would be another bad trade. So already you're 75 pips down. Not a good start. This one here, well, there's no obvious high apart from up here, and that's way out of my comfort zone. So I would ignore this down arrow simply because the stop loss is too big and it doesn't suit my risk tolerance. So I wouldn't take this trade, and you know, I was probably correct in not taking it. This one here though, I could set my stop loss just above this high. So it would be between 45 to 50 pip stop loss. I would be looking at 90 to 100 pip take profit. If my stop loss is 45 or 50 pips, once price goes in my favor to 45 or 50 pips, I set to break even. So I would be setting break even around about here. And of course, price does carry on its merry way, and I would make 100 pip profit. So I've lost 75 pips, but I've made 100. So in 3 trades, I'm nicely in profit. Ignore this arrow because price is below the moving average. We move on through the year, and here's the next trade. It's a down arrow and price is below the moving average. My stop loss would be just above this high, say 30 pips, and I would be setting to break even at 30 pips, and I would be looking at a take profit of 60 pips. So here's my break even setting. Does it hit 60 pips? Yes, it does. So now I'm nearly 100 pips in profit. So looking a bit better. Here's the next trade. My stop loss, well, you can use this multi-time frame moving average as a kind of support and resistance line. So 50 pips would be my maximum. You'd just about be okay. I'd be looking at 100 pips take profit. Well, it goes up here, doesn't quite hit 50 pips from a break even. So at one point, it nearly hits my my stop loss, but doesn't, and then it carries on, and you can see that it easily hits 100 pips right up here. Look, lovely, another amazing trade. So now you're nearly 200 pips in profit. That's pretty good going. This is interesting. Price is above the moving average until it isn't, of course, and you get the down arrow. So your stop loss would be a maximum at 50 again. It goes to 50 here, so we'll be setting to break even around about down here. Does it hit 100 pips? As near as damn it, yes. We'll call it a yes. It's very close. Of course, if it didn't, it would hit your break even anyway, so you wouldn't lose anything, but potentially you're 300 pips up on this simple strategy. But as I'm talking, I hope you realize and can hear that through every trade, I'm referring to my rules, my strategy rules, and I refuse to break them. So you would ignore this arrow because price is below the moving average, and this is telling us to buy. This one here, your stop loss would be 50 pips. Your stop loss would be 50 pips. Unfortunately, you'd lose 50 pips on this trade. So that's unfortunate. But of course it happens. You wouldn't take this one because you're already in the trade. So you would take this one here. It would be your next one. Your stop loss, well, there's a small high here. You could set it at 40 pips. You might have been okay, just about. you'd be looking for 80 pip profit. It didn't hit your break even point. Nearly did. You might have set to break even, but if you didn't, you would easily hit take profit. And if it did hit your stop loss, or if it did hit your break even, you've got another trade here, which, you know, would be a maximum of 50 pips, and you'd make 100 pip profit easily. You'd ignore these arrows because price is below, so you'd only be looking to sell. But unfortunately, you would then miss this lovely upward push because there's no indicator alert. So you would miss all of this, unfortunately. You would ignore this one. And then you would got this one here. Again, I'd probably use the moving average as your stop loss. So 30 pips. You'd be looking at 60 pips take profit, and it does that easily within just a few hours. You would ignore this one here because price is above the moving average. This one here, your stop loss would be below this last pullback. So say 40 pips and looking for 80 pip profit. Easily made 80 pips. Another one here. Your stop loss would be around 45 pips, so you're looking for 90 pip take profit. Does it hit it? Let's have a look. So 45 pip is your stop loss, 45 pip is your break even, which is just here, and it hits your break even, unfortunately. This one here, your stop loss would be 50 pips. You lose 50 pips on that one. But I hope this strategy is showing you that it's not 100% win rate, but using a 2-to-1 win reward ratio, 2-to-1 win loss ratio, means that you only have to win 4 out of 6 trades to make a profit. Simple as that. This one here, your stop loss would be 30 pips. You'd lose 30 pips there. And this brings you right up to the current trade. Now, I don't like this because my stop loss would have to be over 50 pips in order to take the trade. So actually, personally speaking, I wouldn't take this trade. If you did, you know, you are actually in profit at the moment, but I wouldn't have took that trade because my risk tolerance means that if the trade is bigger than 50 pips, then I don't take it. It's simple as that. So anyway, if you would like this non-repainting indicator based on the MACD crossover, you are more than welcome to it. The link to my website, oldmanwisdom.co.uk, is in the description below. Register at the website and you can get this indicator. So until next time, I will see you soon.